Today we're going to be talking about what is your best trade setup. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Thursday, and we're chipping through the week. Been an interesting week. We've had some reasonably good trades on pound, euro, a couple of the pound crosses. Gold has given off some good trades, a little bit more narrow range week in some of the pairs. Some of the other US dollar crosses have had some huge moves. So again, it just shows you that on any given day, any given week, whatever instrument you're following, you're going to have some big days. Other days, you're going to have maybe some narrow range days. Today, we're going to be talking about what is your best trade setup. So I'm fielding a lot of questions from a lot of traders that are repetitive in nature, asking about why there was a trade there, why there was a trade there, why did you take the trade there, or why isn't this a trade, or could you trade this? Coming back to what we talked about early on about building your playbook. So however it is that you're trading, whether you're trading with 4-hour charts, daily charts, EMAs, stochastics, whatever you're using, you need to know what you're looking for. You need to have a trading plan. If you don't have a plan, then you're planning to fail. So, one thing I learned from Mike Bellafiore is he talks about building your playbook, building your trading business. Now, I have a very simple model, and the reason why I've sort of trained myself to focus on this simple model based on what we talk about in the 12 candle window is that it narrows my focus time down to some very specific trading setups. I also know that if I sit at the screen all day, or if I try to trade every single move in the market, that typically is where most of my damage has come in the past. And as I've talked about blowing up trading accounts and doing everything wrong, putting major wins on the board and then wiping it all out on 2 or 3 stupid trades, you learn to figure out what your triggers are, where you need to rewire yourself for greatness. And one of the easiest ways to do that is to actually know exactly what it is you're looking for. Now for me, I talk about this in other videos, quit trying to just get pips. So for a long time I was consumed about trying to get pips, as many pips as I could. I didn't really fully understand the concept of identifying key trading setups and then learning to scale them up in size. Trading less, not even worried about how many pips, but identifying the best trading setups and then knowing when you can put size on, because that trading setup has a high possibility of following through. You've got asymmetrical risk reward, and the most important part is that you're in the right direction. So what makes your best trading setup? Again, not chasing pips and worrying about pips. Chasing pips is what they want you to do. They want you to chase the market because eventually they know over time that the house will win. They'll get you. You're going to get lucky on some trades. You're going to get some really big trades. You're going to get overconfident. You're going to over leverage. You're going to get caught into something. You're going to get underwater. You're not going to use a stop. You're going to average into a losing position. You're going to get your arm bent so far that you blow out all those wins, and then you start again, and the cycle repeats itself. So if you're not sure what a best trading setup looks like, then you should stop trading and go back and go through your charts and identify, however it is that you're trading, where the best trades set up. Focus on those, understanding clarity, the exact clarity and nature of how those presented, how those set up, why and how and when, what made that a best trading setup. Was it a squeeze trade inside of a peak formation low, or was it a squeeze trade at the low of the week? Was it a trend trade? So for some traders, they're very naturally bullish and trendish types traders. They identify trend trades really easy. They get great trades on those, but obviously we know the markets don't trend every day. So they get caught in squeezes, they get caught in false break reversals, those sort of situations. Now some other traders are great reversal traders. They can identify a reversal trade setting up and bam, they nail that, they lock in their pips, They can scale that up in size, but it's the other trades that they try to take that get them chopped up. So identify what you resonate with best. Now for me, I'm probably much better short trader than I am a long trader. But that said, I love a false break reversal at the low of the day or low of the week for a reversal trade, especially when it's in the timing window. Squeezes, reversals, short trades, I really like to trade those. So I have to go back and print off some of the other same trades that are bullish and study those, understand how they will present to me in live time on the chart. And I build that playbook, and again, in live time, when I see those setups, I might trade them a bit smaller because I'm still a bit hesitant or not as good as I am with the short trades. But which trades are scalable? That's the trades that I like to focus on. So my trade setups typically are in the timing window at or near round numbers, meaning they may have already locked in a level, will have already had a stop hunt to the high or to the low, or we are going to be in the trade that is the fast moving, impulsive move to the extreme, hitting stops. And that's what I like to trade, because I know when they do the stop hunt, if the market's been coiled and congested, it's going to move very fast. They're very low stress, and typically will have an engulfment or pin hammer or both that locks in the level, which allows me to identify a 1-bar stop and asymmetrical risk reward. So at least 2 to 1, maybe 3, 4, and 5 to 1, depending on when and how that presents. If it's the low of the day, low of the week, high of the day, high of the week scenario, we could be looking at a full day reversal, 100 or more pips for some of those trading setups. But it's important that you can identify what your best trading setups are. For me, I understand that trading those and trading them bigger each time is better than me trying to trade every move in the market. Now, I think that there's plenty of really great best trading setups available, but sometimes traders need to follow 3 or 4 instruments to be able to pick 1 or 2 of those a week, or maybe one a day, and that's fine. Ideally, if I can hit my target in 2 or 3 days for the week, that reduces the stress or reduces that feeling that you need to trade, which again comes back to how your brain is wired, what type of self-talk and mindset training are you doing on a daily basis. We talk about this in the 7-step daily routine for high-performance traders. If you haven't done so, go to my homepage, download it, ritualize yourself for success. The mental game is critical. Trading psychology is about you not coming unstuck from your plan. So all this stuff about discipline and everything else is great, except that if you don't understand exactly what it is you're looking for, you'll trade everything. If you train your brain to identify and focus on 2, 3 setups that are the high probability setups, and then also train yourself that if it's not there, to walk away and not be looking for a trade, because then you get yourself caught into stuff that ultimately can potentially do damage not only to your financial capital, but your psychological capital. So again, thanks for a ton of great feedback. Go through your charts, print off a couple of your best long setups, your best short setups, and your best trend setups. Study them. Know exactly what it is you're looking for. Don't worry about the days that are really hard to trade. Don't worry about trying to trade every single move in the market. Focus on the trades that you can scale up in size. What made them scalable? What were the criteria that set that up for a big move or a strong move, high probability move where you were able to target asymmetrical risk reward, managing your risk, and then how would you have managed that trade? Would you have trailed it? Would you have taken profits out along the way? All the little things that are important, because trading is about your live performance ability at the screen. So all this stuff is great, but again, understanding how would you execute that in live time when the price is moving around, the price is flashing on the spreads, the market's moving around, it's quiet, and bang, all of a sudden it shifts. How do you manage that in live time? What are your performance skills like? Understand every aspect about how you will perform in executing your best trading setup. We'll look at a couple of examples which were great setups yesterday pound, euro, and gold again. Keep it simple. Thanks for a ton of great feedback. And again, thank you for hitting the like button and turning on your notifications. Stay disciplined, stay focused, and may the markets go with you.
Good day, traders. Continuing our discussion on identifying your best trading setups, and we're looking at the pound. And yesterday, an example of a great 25 pip stop hunt to the low, a blow-off move with trend. But just again, an example of knowing that you're looking for certain setups on certain pairs at certain times of the day. With me, I like to be in the market as short as time as possible. And the reason why is I don't want to be holding on to something that's not going anywhere. I want to be positioned in that market when it's about to blow off or move quickly from one side to the other. Usually that will be in a stop hunt fashion, either after a squeeze or a capitulation type move or a reversal trade. So looking at yesterday on the pound, again, we come back to some basic understandings about the box. Three things markets do: they break out, they pull back, and they trend. They break out, pull back, and reverse, and they break out, pull back, and go into a trading range. And yesterday we saw the pound consolidate near the low of the close of the session, pulling back, and again, round numbers, the market is traded off of double zeros coming down, worked sideways in the beginning of Asia, and then come off 50 down 25 pips, triggering end of day traders, consolidating underneath of that end of day and continuing to trend down. Now, heading into the open of the Europe-London window, we see for 1 hour the market moving up in a 1, 2, 3 format. And again, understanding that underneath of this low, we obviously have traders that are long and they have stops placed underneath of that low of the day. We have a pin hammer that traders have taken as an entry for a long position. So again, we see the market is in a creeping trend down, creeping down. We get long traders enticed into trading off of the low, off the double zeros. Again, understanding we're in a creeping trend down. We have this falling trend line area, and then we get the engulfment of the upper 4 bars. So that first hour, when the first bar of the second hour prints, is completely engulfed. And this is a great example of a 1 bar stop for a capitulation or a blow off type move for a fast 25 pip stop hunt to the extreme. Now again, understanding that traders would have stops underneath, and if they don't have stops, they're more than 1 bar is now 25 pips or greater. But again, it's a capitulation style blow off in direction of the trend. And worst case scenario, this market would have pinned through the low and pulled back and closed at or near the low, getting traders to either be at break even or second guess or get out of the trade, whatever that may be. But again, a creeping trend down for the blow off with a 1 bar stop, 25 pip extension of the double zero box before again 1 push, 2 pushes, 3 pushes down, and still no follow through for the reversal back up in the other direction. So again, if you're in this trade, understanding when it would expire, when you should have been out. But with a move like this with the pound, as I've mentioned, the pound, the euro, 20 to 25 pips would be my fixed profit target, unless I was in a squeeze for a reversal or a trend trade in the beginning of the day. So this move is a blow off, one big capitulation style candle. You want to be out with your money, be done, and come back later or trade the reversal if so be. We can see a similar setup in the US session. So again, understanding that this trader's in the money, their stop loss is going to be up here. They jam them in down low for the fast move back up. Fast move back up for 25 through the high of the London session. But heading into the US window, a very similar situation, a 3 push pattern down into double zeros, pins underneath, and then the pin hammer at the end of the 12 candle window, third 15-minute bar of the 12 candle window. We got pins underneath, and understanding that traders who are long over here at the end of the 12 candle Europe window, who are in profit, have now been hit and stopped out, or stopped out at break even. If they held on to it the first time, they came back a second time, and then a third time, pin hammer for the fast 25 pip stop hunt back to the high of the day. So again, understanding that this pin into the high may not completely take out the high. So if traders have their exit up at the high of the day, an example of where the market may not let you out, we've got these lower highs in place. Again, that low hanging fruit, which is almost a dead giveaway. 3 pushes down into the double zeros and a 25 pip stop hunt back up to the high of the day. Something similar on the euro, and just to mention, these trade setups may not be ideal, best setups for other traders. They may be looking for trend trades, or they may be looking for swing trades, whatever that may be. I'm just identifying what I consider to be my textbook go-to best trade setups. I like to see stop hunt trades. These are great because the euro, the pound were creeping trends down. They gave us low of the day structures. They traded into round numbers. So again, we traded into 50 on a 1, 2, 3 in that first hour, and then the engulfment candle. And again, traders who shorted the euro, an example of where this market came down, not quite 38 to 20 to 11. That's 28 pips, 27 pips. So plenty of room to get out with 20 to 25 pips on the euro. But again, understanding that when they trade, the market entices traders into that long market, and they engulf that in one candle. This should be a fast capitulation style type move, which is a stop hunt through the low of the day. And again, just that triggering end of day traders, they've come back into 50. 50 has formed resistance, creeping trend, coiled market. This is coiled volume. They've got stops underneath. 1, 2, 3 engulfment, and the fast capitulation style move for a 25 pip stop hunt through the low of the day. Now, those of you that follow me know that know that I like gold. Plenty of movement on gold, even on a narrow range day. We see a very similar pattern. We see coiled volume. I've talked about looking for this trapped quarter of volume. In this particular case, it's a 50 pip box, but understanding that we've got volume trapped at the low of the U.S. session. We got lower highs. And as the day progresses, in Asia, we get the market forms a new high and a new low, coiled within all of that volume. The market pins down, taking out the low of the previous day, but also triggering breakout traders. And the little bull candle closing beside it at the quarter level after the stop hunt forms this into a bull pin bar. And we are looking for a fast move back to the high of our box. So that box is a 50 pip box, and again looking at 3 levels of rise. 1 quarter, 2nd quarter, 3 quarters. But that fast move is the stop hunt. These are the types of trades I'm hunting. I'm looking for coiled volume where the market, when it triggers stops, is going to move quickly and fast in the other direction. They typically are low stress. They move fast. They're scalable in size. And ideally, they're in the timing window. So in that first hour, middle hour, we want to see a stop hunt, trigger the highs, trigger the lows, and then the fast move to the other side. And gold actually gave off a couple of trades very similar in the same sort of scenario. So we see traders that are long in the Asian session, we see the market form 1 push, lower high on a 2nd push, and then a 1, 2, 3 engulfment, then a bear pin hammer off the quarter level as we head into the close of the Asian session. The next logical place is our stop hunt down to the Asian window. So we see the market came down 25 pips, pulled back. This pin into the middle hour is the stop hunt on traders who were in on that first leg. And then the second 1-2 push into traders that are long off the Asian session. Again, number to number, that's a 50 pip stop hunt. 25 and 25 right at the open of the window. We're inside of our high and low. So again, the stop hunt was inside. When the stop hunt is inside, we can assume or predicate that we may see a retest of the extreme. We have our lower high where we have stops from the traders who were short, but we see the coiled volume. 1 push, 2 pushes, and two little bear candles inside and a bullpen hammer after the stop hunt. So again, understanding that the stop hunt is against the trader who's at break even, consolidating volume underneath 50, pin hammer for a fast 50 pip stop hunt from number to number, double zeros to 50, taking out the high of the day. And then we see the same scenario play back inside again. It's in our gap time, but we see the engulfment pin hammer come off of 50 and a 50 pip move back down to double zeros, getting traders who are long at the bullpen hammer. Then we see the market coil inside, hitting stops on the inside. So again, traders who are short, pinning up into the bear pin hammer, and then hitting stops on the higher lows. So again, the question I get from people is, well, why is that the low of the day? When the U.S. window opens, we're inside of the Asian high-low for the bulk of the entire day. London gives us a new low of the day, a higher low of the day. Why? Because they locked in a new low. They came and stop hunted down, they locked in a new low, and then they made a new high. They come down and stop hunt inside of that window, and the U.S. window has made a new low of the day. The market then proceeds to come down and hit stops on the new low of the day, which is the higher low at the beginning of the U.S. window. One push, two pushes, three pushes, little inside bar, and the fast 75 pip move back through the high of the day. So again, understanding coiled volume, a creeping trend, coiled volume. This big coil is juice for this to explode and go vertical. So when this moves, it's going to go quickly. We see the same thing this morning. We see trap volume inside of a quarter. Okay, and we got two traders that are potentially sitting in profit. We have the trader who is long inside. We have the trader who is short off of 50 inside. The market coils inside of all this volume before finally pinning down and hitting stops on the higher level longs, pulling back and hitting stops on the shorts from the beginning of the day, still inside of our coiled volume. This is a dead giveaway that when this market goes, it's going to move hard and fast. They come down 1, 2, 3, just pin down low enough to potentially hit stops or trigger breakout traders at the low of the pin before pulling back inside again, engulfments at the numbers at 50 for a fast 25 pip plus move through the high of yesterday, triggering breakout traders, hitting stops, pinning up through the level, bear pin, hitting the previous day's high at the quarter level for a 25 pip stop hunt, fast back down to traders that were long. So again, when you see this coiled volume, creeping trends, creep, coiled volume, bang, fast explosive move, these are the trades I'm looking for. Whenever the market coils, I'm looking for a best trade setup that's about to explode and go back to hit stops, whether that's a trend trade for a blow off as we saw in the euro or the pound, or for a reversal trade for a fast, aggressive move back to the high or the low of the day. So print off your best trade setups. If you're not sure what they are, identify with what you resonate with best, study them, understand why they work, how you can trade them really, really well in live time, and then how you can potentially scale those up in size, trade less, trade bigger, and trade better. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.